Hi, everyone. Today, I'm going to go over and give you a very straightforward explanation on what are alternative investments, what the pros and cons are for investing in these types of opportunities, and why they're so popular. So, for those of you who don't know me, my name is Deborah Ostrom. I've worked in the financial industry for over 25 years. I created this channel so that everyone can get information that's easy to understand to help them make better decisions. I have a website with courses. Check out the links below. And as always, please subscribe and like this channel so that you can get notified whenever I drop a new video. First off, what are alternative investments? And this is a term that I think has become basically a catch-all bucket for any investment outside of the traditional stocks and bonds. There are many types of alternatives. You may have heard of hedge funds, private equity, private credit, and some investors consider real estate or commodities also to be in this bucket, and even things like art or other collectibles. But please keep in mind that each of these types of investments all have different pros and cons and different risk return profiles. The reason why investors like these types of investments is that they can complement their traditional stock and bond investment mix that they may already have. And since each of these do have their own unique risk return profile, it can help smooth out the investor experience over time, give them stronger returns, and hopefully ease those years when there may be losses. So one thing to keep in mind is that many of these alternative investments are not liquid the way traditional stocks and bonds are, which means they're not easily sold or bought. And it may lock up your money for 5 and 10 years. So you want to be very mindful of what those uh, rules are around each investment, how long your money is going to get locked up for, and make sure that you will not need that money during that time period. The other item to keep in mind is that because these investments are less liquid, they can be more complicated. There could be higher fees associated with investing in them. The third thing I will mention is that because they are more unique and can be more complex, there may be a higher minimum investment requirement than investing in mutual funds or ETFs or stocks, which are very easy now to invest in for everyone in a very small dollar amount. But the same cannot be said for alternatives. The fourth item I want to mention is that because some of these investments are complex, the companies that offer them may not want to register them with the SEC. And what that means is only certain types of investors that meet certain types of criteria will be able to invest in them. And that's usually called an accredited investor. You need to have at least $1 million outside of your primary residence, or earning at least $200,000 a year as an individual, or $300,000 a year as a couple in the past few years. The other way to be designated as an accredited investor is if you work within the financial industry and have certain licenses or designations. The other thing that is happening within the industry is that many companies want to give more people more access, not just people that can meet that accredited investor status. So many of these investment firms are starting to go to the SEC, registering funds that can give people more access. And many investment companies are also trying to bring down those minimums so that it is more accessible to more people. But that does not change the fact that you do still need to understand all of the items I mentioned before about lockups, about fees, just to make sure that the money you are putting in there is long-term money. So, as I mentioned, I'm going to do a deeper dive in individual videos on all of these types of alternatives. Check out my links below if there's any other topics that you would find interesting. Put it in the comments and we can answer it at another time.